Now let's go back to the first tab. We now have money in undeposited funds that we want to deposit. So we're going to imagine that the Visa grouped those deposits together and put it into our bank account in one lump sum. Let's hit the plus button using the good old deposit form then. And up top, we have all the transactions done with either sales receipts or payment forms after an invoice. Adds up to $2,578.52, which should tie out to what's on the balance sheet in undeposited funds, $2,578.52. We go back on over and we imagine that these two have been deposited. Let's imagine that they charged us again $5. So we're going to say they charged us $5 from the credit card company to process the deposit into our checking account. So that means that we would put this to let's see, bank service charges or something, bank charges. And let's just say that was negative $5. So that means that we have 511 going into the bank. So what's this going to do? It's going to have a deposit for the full amount of 511. It's going to decrease the undeposited funds by these two amounts, and then it's going to record the bank service charge of $5. Let's save and close and check that out. Go into the balance sheet, run into refresh, and we're going to say that we're in checking out the checking, and it didn't do it. Let's go back, refresh it again. You're going too fast. I thought you were QuickBooks. What do you mean I'm going too fast? QuickBooks. You're supposed to be quick. See, it's in the name. Okay, there's the deposit. There's the 511. 511. That's correct. Let's close that back out. Go back to our reports. The other side is coming out of undeposited funds. Let's go into the undeposited funds, noting that it recorded it here. It's not there. Que paso, QuickBooks? What are you doing? There it is. So now we've got the increases and decreases. It recorded them. Even though we did it with one deposit form, it recorded the two separate components that we checked off, because that allows us to tick and tie easily. And then the last bit of the transaction went into the profit and loss report for the $5 bank charges that were entered, and there it is. So there's our sales receipt form is the general idea with the sales receipt. So the invoice when we have to track accounts receivable, sales receipt when we're at a cash register, and if we have to deal with the sales tax, we can set that up with the sales receipt form. Otherwise, you're going to have to figure out some way to deal with the sales tax by basically charging the sales tax in the sales price and so on and so forth. But we'll talk more about that when we get into the setup of the sales tax.